The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 5th magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, no problem. You can let those fingers do the walking. You can always send me an email, steve@tfnn.com, inside the subject heading if you'd be kind enough to put radio show question. And in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magical, marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 97 points, trading out at 25,368. S&P's up 4. NASDAQ is down 79, or a little over 1%. Russell's off about 0.6%. That's 8 points to the downside. Semis are off 1 7/10%. They're off 20 points. Trannies are down 20. NASDAQ Composite off 76. The New York Stock Exchange is up. Oh, how about that? Interesting. Up 67. Buckaroonies up a little over 0.5%. Wilshire is up just slightly. Spot Volatility Index is up as well. It's up nearly 5%, trading out at $20.47. Gold is flat. It's back $2. Silver's not flat. It's down 0.8% or 11 pennies. She's trading out at $14.64. Light sweet crude up 33 cents, leading the charge to the upside. Madison Square Gardens, that's up $11.50 or 4%. Berkshire Hathaway up 4% or 9 buckaroonies. You've got Charter up 6. Eli Lilly is up 5 to the downside. Amazon $58, up 3.5%. Google's off $30. That's 2 8/10%. Booking Holdings down 1.5% or $28. We've got some things moving and grooving. Of course, I want to look at what you want to look at. No request just yet. So let's go take a look at the general markets. You know, November is an interesting month. Yes, we've got election time coming. You're probably getting sick and tired of it, as am I. So be glad when it gets over out there. I made the mistake this year because I was doing so much traveling here of going ahead and requesting a write-in ballot, which I did, and, you know, got that completed. But never have I ever gotten so many text messages from, of course, numbers that I don't recognize, talking to me about political stuff. It was a gigantic mistake. I would never do that again out there. I just wanted to make sure that I got that vote out there. But it has been an issue. It's just hard to believe that, and that's the only place they did request a number. I put my cell number on there. That was a mistake. Gigantic. Look, I made the mistake. Don't you make that same mistake too. Of course, now it's too late for that out there. But November is an interesting month out here, and if we take a look at the last 7 years out here, November is actually one of the most. It is not. When I said one of the most, that was a mistake right there. But I caught myself. It is the most positive month believe that it's the most positive month. I'm going to go have to take a look out there. What I mean from a trading day standpoint, it's up 75% of the time. If you take a look at the number of trading days. Now, this is not over the last 80 years. This just, I don't have all that work done here, but this is over the last 7 years out here. And it shows you I break each month down into basically 20 trading sessions. There are some months that have more. And what I'll do is I'll go ahead and make sure I've got the last few days in as well as the first few days, so at least I've got equality there. But here's a look at November. When I say 75%, you can see, by the way, what these bars represent is they represent the point movement inside of the Dow on each day, trading day, that is. So when you see 1 through 20, it's just referring to trading days, not the calendar day. Today is November 5th. Don't think that the 5th day out here represents November 5th. It's the 5th trading session. If we were to take a look at what is today's trading session, again, this is for the Dow. I'd have to go to my calendar. I believe we're in trading session number 3. Yeah, because we had November 1st was Thursday, then Friday. And now today, interesting, the 4th day of November tends to be the best day of the November calendar out there, at least over the last 7 days. In any event, it is, I just thought I'd throw that out there, just kind of food for thought, or as Stevie likes to say, something to think about. I'll throw out there food for thought. Over the last 7 years, what is the next best trading month of the year? Actually, I apologize. I was just told by my spreadsheet out here that November is the second best month. So the question has to be reframed. What is the best trading month of the year inside the Dow over the last 7 years? You're exactly right. It is February. Of course, we're well beyond February, but it is February. It is the best trading based on number of up days versus down days. Okay, enough about that. Let's go take a look at the markets, see what they're communicating to you and I. Let's start in on the New York Stock Exchange, an index that is trading to the upside. Let's try to figure out its message here. And what we can see is that the New York Stock Exchange thus far has put in a nice bottoming pattern. The way that it does it, especially when you get down into that extremely oversold level of its advanced decline oscillator reading, which in this case here, it got down below the minus 250 level, did that on the trading session of October the 11th. What will typically occur is you will see price, New York Stock Exchange, top panel, make a lower low in price direction, but the advanced decline oscillator reading does not confirm that. In fact, it confirms just the opposite. It sends you a message that says it is preparing for a bottom. How does it do that? It does that by going ahead and generating a higher low in that advanced decline oscillator reading. By the way, that oscillator is nothing more than the difference between the 19 and 39-day exponential moving average of the advanced decline issues out there. What took place while I was gone, when I say I was gone, took place on the trading day of November 1st, so I believe that was on Thursday, was you had a nice, huge market breadth volume day out. Market breadth and I think market breadth volume inside of the New York Stock Exchange. Extremely good out there. That extreme goodness, yeah, inside the New York Stock Exchange took that advanced decline oscillator reading above zero. So for those of you that like to use the New York Stock Exchange as your whipping boy, it's actually bullish out there. So if you're bearish, I'd say be careful. Why? You got a bottoming pattern, and then you got confirmation. You're up above the zero level of the advanced decline oscillator reading inside the New York Stock Exchange. All it needs now is a spot VIX index close below 1759. Of course, that's at 1:14 in the afternoon on November the 5th. That number will be slightly different come tomorrow. Very interesting. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's kind of jump over and take a look at a couple of different things out here. The two things we're going to look at right now is we're going to try to tear apart, not completely tear apart, but we're going to dive down into the NASDAQ 100 specifically, which is the indice that is struggling. Apple, we took a look at Google, Amazon, a few others that were trading to the downside out here. And when we take a look at the equal weighted ETF, by the way, Stevie likes the QQEW. That's the First Trust NASDAQ 100 equal weighted ETF. And we like to compare that to the Qs themselves, the weighted version here. We can see on an equal weighted basis, very little bit of a pullback today. That's the upper line, by the way. So the high a few days ago, this was the high on the trading day of the closing high on November the 1st out here, was up at 59.37. You're at 58.87. You know, just a very small, light pullback out here. Obviously, Apple releasing earnings after the bell on Thursday, I believe it was, and then pulling back as it did on Friday. Today as well out here, you know, having being a big influencing factor inside the QQQ. I kind of laugh, I kind of smile, I kind of smirk out there because there's a group of technicians that, you know, you hear, I hear on the tube out there that will use the it will start using the statements such as, do you realize that it's just 3 or 4 of the issues inside the Qs that are driving the market to the upside out there, and something is just simply bad is going to happen because of that. You've heard that before, yet they seem to go into the closet when it is just the reverse. What we're looking at here right now is, quite frankly, just the reverse. Now, how do we know that? Well, what are the other tools that you and I like to use out here? First, we can just take a look at the price movement of the equal weighted versus the regular weighting. Then what you and I can do out here, just simply because we have the power to do it, is we can go take a look at, we can ask ourselves the question on a daily basis, and what percentage of the issues are in breakout mode. Now, when we talk about breakout mode on a daily basis, you and I are just going to take a look at the number of issues trading above the top of their box, the top of their box being the TAS market profiles. Why are we looking at the number of issues trading above the top of the box out there? Well, the top of the box is resistance. Once you get above resistance, old resistance should become new support. So on a daily basis, it tells you whether you've got a breakout party or not. Well, while I was going out here, what we did see take place was back on, well, it was really the end of business, October 31st out there. So November 1st at this stage here, we had the bullish crossover inside of the NDX 100. Now, the bullish crossover takes a look at the number of issues trading above the top of the box versus the number of issues trading below the bottom of the box. You see, just the opposite is true out there. And what this tells you from an equal weighted basis, as we speak right now, 1:21 in the afternoon, 44 of the issues inside the NDX 100, and it's more than 100, by the way, are trading above the top of the box in breakout mode. And so then you say, Steve-O, well, how many are trading below the bottom of the box? Only 8. Apple being one of them. The higher weighted stocks inside of that indice are the ones trading below. So the generals, so to speak, out here are kaput. They're done. They're over. They're tired. Maybe they're coming back to support. That's something you and I would have to take a look at. But all the worker bees, yeah, the rest of the artillery is moving forward. So you've got a bullish crossover inside the NDX 100. So where are all those folks that always like to trash the indices out here and say, well, there's only X number of issues that are really carrying the market higher, when now what we know, you and I, at 1:22 in the afternoon, on the trading day of November the 5th, are saying, hey, not so fast to the downside. Is the NDX 100 in trouble? Yeah, with regard to its weighted issues out there. No, we can also take a look at the S&P 500. It's equal weighted versus the weighted, but we'll just skip that. We'll just simply go right to the market breadth here. And inside its market breadth, it too had a bullish crossover at the end of business on October 31st. I believe that was Wednesday. And then some follow through. Right now what we have, just to give you an idea of market breadth on a daily basis out here, just something to think about. And that something to think about says there's 220 issues trading above the top of the box. Now, what's really interesting is the market may have made a bottom on October 29th, when things look just bleak out here. But we've gone from bleak to peak. I'm not talking about peak D inside the Tiger's Den, and I'm not talking peak like it's peaked out. I'm just saying, hey, this little puppy is headed higher, or so it appears to be, or so it's giving you and I the signal, hey, election schmection, whatever that means out there. But we've got 220 issues trading above the top of their profiles after just truly getting trashed to the downside in just short order. It kind of really just confirms what you and I looked at inside the New York Stock Exchange out there, because there's only 43 issues inside of the S&P 500 trading down below support. Now, look, it is a different story, granted, if we were to take a look at a weekly time frame out there. If we put up the weekly time frame, we're going to see, well, hey, Steve-O, only 80 above the top of the box versus 215 below the bottom. So which one is right out there? Of course, it depends on your time frame horizon. You're going to see a turn on a daily time frame well before you're going to see one on the weekly time frame. Very interesting out here. When we take a look at the S&P 500 and the NDX 100 out there and the New York Stock Exchange. So what is it that the markets are doing? Because that's a great question, because somebody is saying, so what are you telling me, Steve-O? I'm telling you, we've got some signals of a bottom out here. I'm telling you what it is we're seeing inside the markets right now with regard to moving sideways, with regard to what we saw on Thursday and Friday out here, really more Friday than anything else, is just normal. And I know you're saying, what do you mean normal? If we take a look at the NQ, so we're going to just stay with the NDX 100 in essence, but look at its equity futures contract. What you can see out here, well, let's just go ahead and expand that chart. What you're now going to see, because it's the only chart we're looking at, is price got up to the top of its task market profile. The resistance level. Remember, we looked at how many stocks were trading above resistance inside the NDX 100? A huge amount compared to the ones below the bottom. But the actual equity futures contract ran into resistance. Just said, man, I'm maybe out of gas here, need to recharge. Looks to me like it's just recharging, because the top of that profile was 71.47 and a bit of change out there. And the actual high was, yeah, if you guessed it, back on Friday, the actual high was 71.43. Missed it by just this much out there, but ran into resistance. Just retracing as we speak right now. I'm not saying you can't retrace more, but you now know under the covers inside the NDX 100, it ain't as bad as maybe people are making it out to be. And inside the Russell 2000, that's a little workhorse out here, it too ran into resistance. The resistance level being the top of its market profile, 1551.80. Hey, look, if you take a look at the Dow, is it really that surprising to you or me or anyone else out there that is trading higher today? Of course not. It's traded above and closed above the top of its TAS market profile, 25,143 for the last 3 trading sessions out here. So it's kind of having a breakout party. Not the case in the NQ, not the case in the Russell, not the case in the ES Mini. But they're just consolidating at this stage of the game. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So no requests thus far, none by email. Let those fingers do the walking. Steve at TFNN.com. Just put radio show question inside that subject heading. Just makes it easier to be able to pick out your legitimate email from many of the other pieces of you-know-what that each of us seem to get out there. If we just stay with the NASDAQ 100 scenario out here, because if we can figure out when that bottoms, knowing that the NDX 100 is in bullish mode on a daily basis based upon number of issues trading above the top of their box out here, knowing that the Dow is in breakout mode because it's above the top of its box, knowing that the Russell 2000 just camped out underneath the top of its box, and the ES Mini just kind of not really playing a driving role as we speak right now. So we just should take a look at those top 5 holdings, let's say, inside of the NDX 100. But we can look at certainly the top one. And here, if we take a look at Apple in its pullback, of interesting note is that in the month of November, that's the month we're in right now, we have a brand new TAS market profile that formed. And on a weekly basis out here, the profile formed underneath the price of Apple. Typically a very bullish outlook for it. Something to think about. Now, it only remains that way as long as price stays above the top of that box out here. The top of the box is priced at 197.05. The low thus far is 198.17. No, I'm not saying that Apple has bottomed. We'd like to see some other type of signal on a daily time frame. And I'd have to say daily time frame would be the shortest that we would take out there. And we can go take a look at the daily time frame to, give you and I a message about that. And by the way, the message as we speak right now, it's not good. But if I didn't have this monthly TAS market profile, I couldn't say, okay, I get it. Price is pulling back to support. Again, 197.05. Now, if price closes, and I can see on this, I can see a breakout, or what appears to be a breakout, at least on a monthly basis. Because during the month of August 2018, it was a wide, did I say wide? I mean wide ranging bar to the upside. And we're talking with 700 billion shares. Now, the pullback out here so far, no big deal as we speak right now, but we're just a few days into the month, so I really can't call it from a volume standpoint. But prices, in essence, is just really coming also back into the breakout gap. So the breakout gap, interestingly enough, is very close to the top of the box. 195.96 is the breakaway gap on a monthly basis. There are several other gaps out here inside of Apple, so let's not get too carried away. Let's only get carried away if there was a gap to the downside. Won't be in the month of November, but in December, I mean, it's a possibility. But we can't. Just erase what I just said. It's not applicable. N/A as we speak right now. But so far, all we've really seen Apple do on a monthly basis is trade with inside of that candle. That is nothing. It's really no big deal. Well, if that's the case and it's no big deal, how are we going to know if, in fact, Apple forms a bottom? Hey, on a weekly basis out here, you can see a wide-ranging breakout level. July 30th, that's beginning date in 2018. 224 million shares to the upside out here. And last week, pulling back with about 270. So, okay. Still, not that big of a deal inside of Apple just yet. From a bottom standpoint, again, I mentioned the daily time frame. Daily time frame, you can see trading below the bottom of its box out there, so that's not very helpful. Of course, it is also in wave number 4, as Basil Chapman likes to call it, wave D. And it's at that wave D where I believe Basil would second the motion. It's where you could see something else happen, or something along those lines out here. Now, hasn't confirmed that. It couldn't confirm that until tomorrow out here. But maybe it is something to think about. Maybe there's more than just that. Because what is Apple doing? Is Apple actually forming a Gartley buy pattern out here? Well, the only way for me to really draw this, make sure I have 500 bars in here. I do have 500 bars. Here is what that Gartley buy pattern could look like. And we just simply, I'm just going to use the easy one. That's coming back to the June 25th, 2018 low. Up to the Stevie Rhodes momentum indicator top. That's on October 3rd. Then that moved down here into letter number B, or the second wave to the downside. That's October 11th. Makes a nice little bounce out here. Never closes above Stevie's red line. It's green, of course, as we speak. And then it is got the A to B equals CD. So you can see that A to B equals CD pattern right now, right at about a 0.618. It's not exactly a 0.618. It's moved a little bit lower. Maybe it's going to be making about a 0.786 retracement out there and just extend to the downside. 786, by the way, would get us down to about 192.02. And let's just say maybe Apple does that over the coming days out there. How will we know if it's a Gartley buy? We'll know because the cavalry will show up. But what I mean by that is you need to know your P's and Q's. You've got to understand your bullish and your bearish reversal candle signals out there. Once you understand those and you combine those with patterned tools out here, such as the Gartley buy or potential Gartley buy. We can't call it a Gartley buy just yet. We know it's possibly forming out there. We know that if it does form, just imagine the upside movement inside the NDX 100 and the Dow. Yeah, the Dow still traded above the top of its profile out there. We took a look at the daily time frame. So that's in bullish mode territory as we speak, at least at 1:36 in the afternoon. It is something to think about. So we'll keep our eye on Apple because it does look like, to me, it's trying to complete a bottoming pattern out there, and one that would be a real heads up for both you and I as to what the NDX 100 wants to do. But right, you and I just spent some time. We already know that the checkup for the NDX 100 right now is actually pretty bullish, and that ain't no bull out there, and that comes from Stevie San. All right, so we're done with the NDX 100. You got the Dow trading up 127 points. S&P is up 6 out here. What else do we want to look at? What else do we want to take a look at out here? I pose that question to you. All right, I don't have any answers out here. Just trying to provide some. So what else is it that we really want to pay attention to? Well, we could pay attention to that, but we won't. It's probably, we could pay attention to that, but we won't. I had mentioned it earlier. I touched on when we were looking at the New York Stock Exchange. It's really more so this chart than anything else out here. And this chart being the bottom panel, that's the spot volatility index. Now you can see that it is trading above the 50-day exponential moving average. Right now, price is 17.59. So you got to use that as kind of a range out here. We're trading at 20.48. This will resolve itself. And when I say resolve itself, it will get back in line. It will get back in order. Right now, spot volatility index, it's all screwed up out there. Can I say that on the radio? It is screwed up. It's trading at 20.48. Friends and family. The futures contract for the VIX index for June 2019 seems like just tomorrow. It's traded at 1908. May is traded at 1902. April 1901. Yeah, you can't. March 1915. You kind of get the message out here. Well, maybe you're not getting the message. Let me give you the message out here. Just some short-term scaredy cat stuff that's going on inside the market. It's going to resolve itself. The future looks bright. We take a look at the futures contracts for the VIX index. Now that is something to think about. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 146. S&P is up 8 points out there. And I spent the weekend visiting my youngest. She's up in Washington, D.C. She's right now she's one of the project managers that is in charge of building the Eisenhower Memorial. Yeah, you know, all the stuff on the news and everything. There's actually nothing cooler. I had a little bit of time on Friday afternoon just to, after spending some time with her, take a look at the actual site and what they're doing out there for the Eisenhower Memorial, which, by the way, is being built right across the street from the Air and Space Museum out there. But just kind of cool, just sitting in the park, or what they call the mall out there, and get the Congress on, you got the Capitol building on one side, Washington on the other side, and just to kind of put in perspective, to know that my daughter, one of the key project manager people out there, working on something that's going to be around for centuries, being visited by, you know, hopefully I'll be visiting it for the next couple centuries too. In any event, let's go to John in Philadelphia. John, thanks for calling. Thanks for holding. How are you today?
Steve, well, I'm very good. I hope that young lady carves her initials on the pedestal.
I asked her about that, and she said, whoa, no, they can't do that. But they are talking about, they do it. There's several really large columns that are actually hollow on the inside. So I don't know if I'm allowed to say this. I think I can. But they're talking about putting in some type of like time machine box thing or whatever they call that inside there, so that maybe, you know, hundreds of years from now, maybe somebody will, you know, pick it up. I don't know. In any event, I asked her, I said, hey, Steve, can you put your small initials somewhere?
If you are not doing your show Tuesday, Wednesday, Thursday, and Friday, we will now know why you're MIA. So, Steve, I wanted to ask if you could help me, please. with the euro currency, the euro versus the dollar, that currency pair. It's currently at 114 or thereabouts. Yeah. And, Larry Pesavento has documented this well. The currency pair has made thus far, last week, a double low in August and last Wednesday.
Sure.
My question is there anything in your work that says to you odds are very high that we go down and break and move under 113, and if so, where do we go?
So if we do, and I'm going to just use right now, I'm going to use the actual futures contract just for the moment. And the reason I want to do that and pull that out, John, is because the TAS market profiles, I think, are better for the euro when I take a look at the futures information. And so when I take a look at this here, your question is, are we going to break out to the downside? Is that one possibility? Of course it is. The way that we would know that, you would see it close below the bottom of its profile. That's about 5 days old, and that's at 1.1402. The structure of this profile is bullish. And that means here that price could get up to 116 as its next counter trend rally area, would still be below the weekly profile, which is up at 1.161. The only way we'll know if it's going to get up to that level, being in the 116-ish area, would be a close over the center of its box. Now, the structure of this box, John, is bullish, meaning the center at 1.149 is closer to the bottom than it is to the top. So if you go ahead and do that, and if I put the currency pair out here, and taking a look at the double bottom pattern that you were referring to. So now it's very clear to us out here. And we can see that along this bottom area, we can see that buyers have come in by not just an up session, but just simply the bullish candlesticks out there. Back on August the 16th, you had a bullish engulfing just like you did a few trading days ago. Price right now is trading above Stevie's red line. That's at 1.138. So, and the profiles that are on here, now I'm looking at the currency pair. So if we take a look at the currency pair, it too has a bullish structured box. So this says on the currency pair, the level you'd be watching for, John, so far, just a counter trend rally into the top of the box, which is resistance at 1.1436. A close above that, then I believe what we're looking at in the 116 area, as we looked at on the futures contract for the euro, really is confirmed by the Tom DeMark setup to the downside, which began, or the count in essence began ticking on the trading session of October 17th. And just so happens that that high is 1.1581. So that would be my upside range where price would run into resistance out here. So I'm going to use 1.1436, a close above that, and then the euro wants to move higher. Did I help answer your question?
Yes, thank you thoroughly on part one. And part two is, if it does break on the euro versus dollar currency pair, the cash market, which you looked at secondly, if it does go down and break 113, where's it go?
Okay, so that's a good question. And for that, what I will do is I'll go ahead and pull over the weekly time frame chart, because I think we need to look at something that's a little bit longer duration in order to try to answer that question. And the way that I would answer that, and I'll pull over the chart here, is we would look at the Tom DeMark setup on a weekly basis, that is support. And that takes us all the way back, John, to the trading session weekly of June 23rd, 2017. We can see that red dashed line across here, and that says that to the downside, the euro's targeted level of support should be that low, which comes in at about 1.1119 out here. And on a weekly basis, it's totally game. You know, we can see even on a weekly basis where we saw the bottom, that double bottom out here, you can see that it formed this little three-river Morningstar candle formation. So we know there's good support at the lows that you're looking at, that if they get broken out, says, okay, you've got lower price for sure. And if things were to really fall apart, then to answer your question on a weekly basis, what we'd be looking at is an A to B equals CD to the downside. So in essence, if the target of that Tom DeMark level were taken out, then we'd be looking at a 1-to-1 A to B. We'd be getting down to par. We'd be getting down close to it, because the downside becomes just the 1-to-1 A to B equals CD is 1.056. But in the A to B equals CD pattern scenario, I would never tell you that this is going to only make a 1-to-1 to the downside. Instead, I would tell you this is going to make an expansion of that C to D leg if those bottoms, if those lows that you were taking a look at, we just took a look at, get taken out. And more like 1.021. So that's where I see as the downside longer-term target if the lows, if that double bottom-ish pattern gets taken out. That's what I see. What do you see?
Excellent. You answered both questions thoroughly, so I have everything I need from you, so I appreciate that.
Perfect. Okay, you bet. Always good to hear from you. That's John in Philly, and that was taking a look at the euro U.S. dollar. And the reality is, folks, it really is all about currency. It's really all about the currency pair. And so I usually, and today I'm going to, do a segment with Tom at about 3:15, and I will share with you at that 3:15 time frame what it is that everybody should be looking at, especially during tomorrow evening, Wednesday morning, election cycle time, to just simply use the market information to make a determination as to what the markets are doing and where they're going. And there, we're going to have to pay attention to the global flow of currency. So we'll take a look at that at about 3:15 this afternoon. Steve Rhodes with TFNN. We'll be right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So for one of our dinners that's in with strep throat. Oh, that's not fun. This is for Bill. Bill wants to take a look at the gold contract and crude oil out here. So, Bill, if we take a look at the gold contract here, you're going to look at gold price in dollars, euros, yen, and pounds. And what you're going to see with regard to gold is it just continues to try to bust out its resistance level. That's the top of its daily market profile. That level is 1238.70. If we take a look at gold in euros, it's pulling back just slightly today. In yen, it's just flat on the day out here compared to Friday. And in pound sterling, it continues to pull back. So here we have the tug of war between, in essence, buyers or sellers, so to speak. If there's buyers, they're in dollars, and they're in yen. And if we're looking at sellers, they're really in pound sterling. Out here, I'd have to say dollars, euros, and yen are more neutral than anything else, and in pound sterling, that's not the case. It is not not neutral out here. I don't see any reason to unload gold or anything like that, but that, in essence, what I see going on with the Goldilocks. As far as light sweet crude out here, if we take a look at its profiles just simply in U.S. dollars, what we're going to see is the pullback out here maybe at about a level of support, which is the bottom of its weekly profile. Hasn't gotten down there. 61.88. Nothing here on a daily time frame chart to suggest to me that it won't get down there. So 61.88 is the level to be paying attention to. If gold closes below that level, then what I would offer is some type of retracement, and that would be a retracement off the low out here, Bill, from about June 19th to the high, and that would say you'd be looking at 57.43. So 61.88. If it holds, that could be a bottom. I'd look for a signal in a daily time frame. If that fails, 57.43 would be the next level. I do hope you feel better out there. Nothing worse than strep throat. Susanna J. wants us to take a look at the GDX. And you're just asking for what's the red line. That I can give to you for sure on the daily basis. I know we're just about to go off the air out here. I can almost hear the music. The red line, it's actually green, Susanna. And that's really at 1944, 1945 where we're trading right now. Folks, thanks for being here. I'll be back with you tomorrow on Terrific Tuesday. Have a great day. Hey, I'll see you at 3:15. Listen on Tom's show. I'll be right back. I'll be back then.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service, Fibonacci 24/7, is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.